The higher the tariff, the more likely it is to have them come into the
higher the tariff, the more you're going to put on the value of that piece, those goods, the higher people are going to have to pay in shops.
The world of trade has been rocked by a real earthquake. While most of the attention is focused on trade wars between the world's major powers, Canada has managed to play a clever and far-sighted game, overtaking its closest neighbor, the US. What if I told you that Canada has just signed a $214 billion deal that could completely change the balance of power in the global economy?
In other words, pre-substitution, if we just continue as we are now. But of course, people will start to substitute. They will find other goods. And as the Christmas Tree Association said a moment or two ago, it's going to be very difficult to find substitution of many things that we currently get from China.
In recent months, America, led by Trump, has actively threatened its partners with higher tariffs on aluminum, steel, and automobiles. It seemed predictable tensions would rise, retaliatory measures would follow. But what happened next turned all expectations about the future of global trade on their head. By imposing tariffs on Canadian goods, the US not only turned its neighbors against it, but also effectively pushed Canada away from its economy. And this is where the real game begins.
Well, when you look at the kind of input Musk has been having into politics, there has been some polling done which suggests there is a strong dissatisfaction with...
As it turned out, instead of giving in, Canada not only responded to the blow, but also seized the moment to enter new, promising markets. By signing several strategic deals with Asian countries, including Indonesia, and cutting tariffs by 90%, Canada immediately gained the trust of many international investors. And these are not just words. In 2024, foreign direct investment in Canada grew by 9%, while in the US it fell by 28%. Do you understand what that means? Canada's economy virtually took off during this period, while the US economy began to sink under its own problems.
There are surveys like the Michigan survey, consumer sentiment, and it's a really worrying number because at some point these sentiment surveys feed into hard data of real consumer spending. And we know this from history and precedent, that's what happens. So when we see a number as bad as this one, it is only a matter of time, unless anything else changes that would suddenly make people more cheerful. Look at that chart. I mean, just look at it. Unless people suddenly become more cheerful, why would this not translate into spending? You see, that consumer lab, the lab from Yale, that number of 4,700, that is providing you don't start substituting goods.
But this is only the beginning. Canadian companies have begun to diversify their risks by reducing their dependence on the US market and opening new offices in Europe, Asia, and even Australia. In addition, Canada is strengthening its ties with the EU, Japan, and India. The country is strengthening its position on the international stage, attracting new partners and showing everyone else that the global rules of the economy are changing. The US, on the other hand, is retreating. Today, Canada is no longer dependent on America. This small country in the north, which we so often forget about, is now becoming a real player on the world stage. Will America be able to regain its lost position? Or will Canada manage to reach a new level, breaking out of the shadow of its powerful neighbor? We will discuss this and much more in today's video. Stay tuned.
They're doing what they should be doing, perhaps, for the European Union, but it does create ill will. And as you know, we're going to be doing reciprocal tariffs. So whatever they charge us, we're charging them.
The trade war between the US and Canada has become one of the most talked about events of recent times, changing not only the economic relations between the two countries, but also the entire picture of world trade. The escalation of the conflict began when President Trump, deciding to increase economic pressure on his neighbors, announced the introduction of a 25% tariff on Canadian aluminum and steel. That was just the beginning. Soon Trump increased the tariffs to 50%, which was a real blow to Canadian manufacturers accustomed to close trade relations with America. Countries that had recently been partners found themselves on opposite sides of the barricades in a global economic war.
the Chinese impression is that they are willing to at least negotiate, not necessarily on Donald Trump's terms, but to talk. But their impression is that the U.S. has not opened channels and not made an effort to open up channels.
The US, accustomed to its role as a world leader, began to aggressively manipulate tariffs in an attempt to put pressure on Canada. However, instead of giving in, Canada, understanding the importance of protecting its economic interests, did not wait passively for a response. Instead, the country's government decided to act decisively and effectively, albeit with some difficulties that could jeopardize its economic stability. Given that Canada has always been dependent on the US market, many analysts predicted that such an escalation would lead to inevitable economic problems, especially in the energy and manufacturing sectors. However, Canada found a way to survive in the face of fierce competition.
Yeah, you'll be surprised just how much we get exclusively from China. And Jim, I'm really curious to get your perspective on the White House's handling of this situation. Not so much the tariffs that have been announced, but this reporting that the White House, that officials have made clear to Beijing that they want Xi to ask for a call with Trump.
Trump continued to tighten his policy by imposing a 25% tariff on Canadian cars and auto. This was a logical continuation of his strategy to curb competition in the auto manufacturing sector, where Canada had managed to maintain high standards of quality and price competitiveness. However, the tariffs turned out to be a blow not only to Canada but also to the US. Objectively speaking, despite its size, the US auto industry had become dependent on Canadian auto parts manufacturers, and any increase in tariffs immediately led to higher car prices in the US itself. Car manufacturers such as General Motors and Ford began to suffer from component shortages, which threatened their production plans.
To allow that. So now you have the U.S. president say, well, I'm not going to open those channels. China has to open them first. It's kind of ridiculous at the end of the day because you are playing with the interests of American consumers, Chinese consumers, etc. The other point I would make about China's reaction today in not quite meeting the U.S. tariffs, 145%, U.S.-China goes to 125. And in Xi's statement, he says, we're going to 125 in response. That's as high as we're going because this is getting a little ridiculous, right? And that's both a signal to say we're not going to get caught up in this tit for tat to the degree that the president is.
Canada's response to all these moves was immediate and unexpected for many. In response to the steel and aluminum tariffs, it imposed a 10% tax on energy exports to the US. The energy sector was a key element of the Canadian economy, and any interference in its operations could lead to significant losses. However, instead of losing heart, Canadian companies began to look for alternative markets for their products. They actively sought partnerships with Asian countries, which allowed Canada to significantly diversify its external economic ties and reduce its dependence on the US market. This move caused considerable concern in the US, as many American companies began to lose competitiveness in the global market without the reliable supplies that had previously come from Canada. At the same time, Canada, having already established economic ties with a number of Asian countries and signed several lucrative agreements with the European Union, expanded its sphere of influence on the world stage. The first results of these steps became apparent within a few months. Canadian companies began to turn away from the US, signing deals with countries such as Indonesia, Japan, and China. Although many analysts predicted significant losses for the Canadian economy at the beginning of the trade war, the situation turned out to be less clear-cut. By early 2024, foreign direct investment in Canada had increased by 9%, while in the US, this figure had fallen by 28%. This contrast showed that businesses were beginning to see Canada as a stable and reliable partner amid the uncertainty surrounding political decisions in the US.
Right now, 145 going up against 125. These are the tariffs between the world's two biggest economies.
And here's another number, 4,700, or about $400 per month. That is how much more money Yale's now estimating, the Yale Budget Lab, that President Trump's tariffs are going to cost average households each year. And with just hours left in trading, the Dow right now.
Canada managed not only to survive but also to take advantage of the situation. Economic agreements concluded with Asian countries significantly strengthened the Canadian economy by opening new markets for energy and industrial goods. As a result, within a few months, Canada was able to break into new markets and reduce its dependence on the US market. Meanwhile, the situation within the US was becoming increasingly tense. Tariffs imposed on Canadian goods not only led to higher prices for cars and other industrial goods, but also hampered the operations of large American companies. Car manufacturers began to warn that higher duties on Canadian auto parts could lead to higher car prices, which in turn would affect consumer demand. Farmers in the US faced a decline in demand for their products, which became another crack in the country's economy.
But it's also an opening to say, okay, we're capping this for now, and that perhaps offers a way forward that we could begin talking about how to bring these down.
Against the backdrop of growing economic pressure in Canada, significant changes could be observed in the attitude of countries willing to cooperate with America. Canada demonstrated its flexibility and ability to adapt to external challenges, which was appreciated by its international partners. All these actions together allowed Canada not only to strengthen its economic position, but also served as an example of how a country can develop, even in the face of global economic turmoil. All this presented the US with a choice: continue to put pressure on its trading partners or reconsider its strategy and restore stability in relations with its neighbors. However, as practice has shown, Canada's decisive policy not only saved its economy from serious shocks, but also gave a new impetus to development that could significantly change trade relations around the world. Finding itself in a difficult economic situation after the US tariff increases, Canada began to take decisive steps not only to protect its economy, but also to reach a new level of international relations. One of the key steps was the conclusion of an economic partnership with Indonesia, which allowed Canada to eliminate more than 90% of tariffs on goods between the countries. This decision proved to be strategically important, as it not only strengthened relations with Asian countries, but also gave Canada access to new markets that had previously been closed to it. Indonesia, in turn, was an important economic partner for Canada in the energy and agriculture sectors, and the reduction of tariffs opened up opportunities for expanding mutual supplies and trade.
We shouldn't be surprised with all that's coming out and all the worries about tariffs. It's not just that, it's the complexity of everything else as well. The changes within the federal government, the worries about job losses, the worries about a slowing economy, higher inflation, and eventually you get these...
At the same time, Canada stepped up its efforts in the Indo-Pacific region by attracting foreign investment. Special economic zones were created in the country, offering favorable tax incentives for foreign companies, which significantly increased capital inflows. In 2024, foreign direct investment in Canada increased by 9%, which was a positive contrast to the negative trend in the US, where investment fell by 28% over the same period. The Canadian authorities also passed several laws aimed at creating a more favorable climate for investors, which contributed to increased confidence in the country as an economic partner. Canada, in developing its economic strategies, began to actively seek new partners not only in Asia but also in Europe. The fact that, amid global trade wars and increased tariffs by the US, Canada has managed to attract companies such as Samsung, Huawei, and Toyota speaks to the high level of trust in the country on the international stage. These companies began to build production facilities in Canada, which contributed to job growth and a significant increase in production volumes. Canada, in turn, has not only provided them with favorable business conditions, but also ensured the protection of their interests in the market. However, not everything has gone smoothly. Canada's response to the US actions has also had consequences. The country began to target energy imports from the US, which caused additional tension in relations between the two neighbors. The introduction of new taxes on energy resources affected the oil and gas industry in both Canada and the US, and became one of the key topics for discussion in economic circles. American companies such as ExxonMobil and Chevron began to review their plans to invest in Canadian projects, fearing further economic sanctions and instability.
Up. You're seeing that swing here going into the afternoon, up almost 650 points. But it was up and down there throughout earlier in the day. With us now, we have CNN business editor-at-large Richard Quest. We have CNN chief national security analyst Jim Sciutto as well. Richard, a key economic gauge, the consumer sentiment now at its second lowest level on record, going back to 1952. Why?
Against this backdrop, major automakers such as Ford, General Motors, and Chrysler began to warn of rising car prices. The tariffs imposed by the US on Canadian auto parts began to bear fruit. With each passing day, cars manufactured in the US became more expensive, which reduced demand for them in both domestic and international markets. While Canada was building up its economic power, the US was facing a real threat to its auto industry. This, in turn, led Canadian manufacturers to diversify their supply chains by signing contracts with European and Asian countries, which was another blow to US manufacturing.
Lived in China, you've covered China for some time now. As we're looking at this question of who's going to blink first, with two very different political systems, what is your gauge on this?
Well, different systems, listen, one's a democracy, one is not. One's a single-party state, very much not a democracy. But China does have politics, and Chinese leaders do not want to be seen, we were talking about this yesterday, I believe, do not want to be seen as capitulating to America. That is not good politics for a Chinese leader.
Equally important were transnational corporations, which began to review their plans for the location of their production facilities. Companies such as Foxconn and several semiconductor giants began to move their factories from the US to Canada, which further affected the American economy. Canada offered these companies not only economic incentives, but also guarantees of stability, which in turn made Canada more attractive to large international investors. In turn, the US began to lose its position as the center of the world economy, which undoubtedly affected its economic growth. It should not be forgotten that this situation presented not only opportunities but also risks for Canada. The US response to Canada's decision to actively cooperate with Asian countries, including Indonesia, could have led to new trade sanctions and economic isolation. However, thanks to a well-designed strategy, Canada was able to shift the focus of its economic efforts to the long term, which allowed the country to overcome most of its economic difficulties. An increase in foreign investment, particularly in the oil and gas and automotive sectors, has become not only a factor of economic stability but also a guarantee of the country's future prosperity.
Well, if they did fall on deaf ears, but it's just the latest example in the really day by day, the deepening trade war that is underway between the United States and China. Yes, we are learning that U.S. officials privately behind the scenes urged China to not retaliate. In fact, the Treasury Secretary Scott Bessent has been saying that publicly all along, warning countries to not retaliate. Well, those warnings have fallen on deaf ears, particularly with China, as they raised their tariffs to 125%. The question now is which side is going to blink?
Considering all these events, it becomes clear that Canada, despite external political tensions, has not only managed to withstand the trade war but also significantly strengthen its economic position on the world stage. The country has managed to find new opportunities for growth, despite numerous economic obstacles, and has demonstrated to the world that it is ready to become an important player in the global economy, capable of competing with countries such as the US and China. Canada's response to economic pressure from the US was not just a tactical move, but an important strategic step that significantly changed global trade relations. By the first half of 2024, it was already clear that Canada's actions were beginning to bear fruit. Although US sanctions and tariffs on Canadian goods became a serious problem for manufacturers, Canada, under pressure, used this moment as an opportunity to transform its economy. Initially, the focus was on the energy sector. Countermeasures aimed at increasing taxes on energy exports from the US were one of the most notable responses. Although these measures hit Canadian producers hard, they nevertheless played their role. In a short period of time, Canada concluded several lucrative deals with energy suppliers from the Middle East and Africa. At the same time, active work began to diversify the energy infrastructure, which not only compensated for losses from US tariffs, but also expanded the market for energy product. This move did not go unnoticed. Soon, Canada began to receive investments from large Chinese and Indian corporations interested in expanding their energy base and gaining access to cheaper and more stable supplies of oil and gas,
including Harley-Davidson motorcycles and Kentucky bourbon. President Trump with the Irish Prime Minister visiting the White House today. The president suggesting his tariffs won't stop here, saying, "Of course, I'm going to respond." And tonight, right here, the new poll showing 56% of Americans disapprove of President Trump's handling of the economy. The number's even worse now on the president's tariffs. ABC's chief White House correspondent Mary Bruce leading us off.
Today, President Trump side by side in the Oval Office with the head of the Irish government.
Equally important was the growth in confidence in the Canadian economy among international financial institutions. In 2024, credit rating agencies upgraded Canada's rating, enabling the government to raise additional funds for infrastructure projects. This was not only a sign of recognition of the stability of the Canadian economy, but also a real contribution to long-term development. Thanks to these decisions, Canadian banks were able to offer more favorable terms to borrowers, which provided an additional stimulus for growth in the real estate and construction sectors. Meanwhile, within the US, the situation continued to deteriorate. The introduction of new tariffs on Canadian goods led to a sharp rise in prices for many consumer goods, including cars and construction materials. The US, which lost a significant share of the Canadian market, faced problems in the export and manufacturing sectors. Tariffs, which were supposed to support American businesses, actually led to contract cancellations and a decline in production. Manufacturers faced shortages of components needed for production, which contributed to price increases and a decline in product quality. American farmers and manufacturers began to experience logistics problems and labor shortages, which also had a negative impact on demand for their products. All these changes inevitably affected the US economy, which began to lose its competitiveness in global markets. Many large corporations, such as General Motors and Ford, began to review their plans to expand production capacity, while large multinational companies, such as Foxconn and Intel, began to focus on Canada, which was becoming increasingly attractive to investors. As a result, despite high tariffs, Canada managed to significantly strengthen its position in the international arena by increasing production volumes and expanding its range of goods. Canada, following its strategy, was not only able to respond effectively to trade attacks from the US, but also significantly improved its position in the global market. Investments, agreements, and economic measures have enabled the country to reach a new level and strengthen its role in the global economy. The US, in turn, found itself in a difficult position as it began to lose its largest trading partners and faced growing problems within its economy. The tariffs that were supposed to strengthen America actually undermined its competitiveness, while Canada took advantage of the situation to strengthen its economic ties with a number of countries and ensure investment growth.